Thank you very much for this opportunity to present again to Charity Village. And so I guess today the topic is the do's and don'ts of charitable receipting for Canadian registered charities. And I'll tell you a little bit about us, and then we can start the presentation. So first of all, I'm with a law firm. I'm a lawyer here in Toronto. The firm is called Blumberg Segal LLP. We have 8 lawyers and 5 just work in the charity and nonprofit area. So we do a lot of work with both nonprofits that are not charities as well as registered charities. And we work with Canadian charities here. We work with foreign charities that are operating in Canada and all sorts of other organizations. We basically have 4 websites that you might find interesting, and I'm sure some of you have been to them. There's Canadian Charity Law and globalphilanthropy.ca, which are basically blogs on legal, ethical, practical issues facing nonprofits and charities in Canada. And then we have a new website that we've put up called charitydata.ca, which has about 5 gigabytes of material on Canadian charities taken from the CRA database, but laid out in a way that's a lot easier than the CRA database. So you might want to check your own charity and its filings. You might find it's much easier to use than when you're looking at the CRA database. The CRA database is more up-to-date than charitydata.ca because we only update it once or twice a year. But just so that you know it's there, you can do all sorts of types of searching within that database and also filtering. So for example, if you want to work out which Canadian charities issued the most receipts, you can easily filter by it. And you can also do it by charities located in Kelowna, BC, if you wanted to as well. And then the 4th website we have is smartgiving.ca, which is just a broad sort of website that we have to encourage Canadians to think carefully when they're giving, and not just to give because someone asks, but to do a little bit of research. We also have a monthly newsletter. If you're interested, you can sign up. And if you're on Twitter and you want to follow me, I'm at Canadian Charity. So normal sort of stuff. This is legal information, not legal advice. The views expressed are my own. We'll take questions at the end, and we'll go for about an hour or so. So we'll start off with some charity law basics, and we won't cover, obviously, everything. We do at our firm a 3-hour presentation called The Fundamentals of Receipting for Canadian Charities. And so when you're talking about receipting, it can get complicated. There are a lot of parts to it. It's not just legal issues. There's also ethics and standards and practical issues. And so we'll cover a lot, but obviously there are limits to what we can cover in an hour. So in terms of just some very basic stuff that I'm assuming probably everyone on the line already knows, one of them is that registered charities are regulated by the Charities Directorate of the Canada Revenue Agency. That's a small unit of about 250 people within this 45,000 person Canada Revenue Agency, and they focus just on essentially charities. And so that's the group that you're primarily going to be interfacing with if there are issues around receipting. Now, also registered charities fall under both federal and provincial jurisdiction. The Constitution Act provides that provinces regulate charities, but the Constitution Act also provides that the federal government regulates taxation. And basically, you know, if you just want to be a charity that's not a registered charity, you're probably not going to be having any interactions with the Canada Revenue Agency's Charities Directorate. But if you want to be a registered charity under the Income Tax Act, then you will be dealing with CRA. Now, nonprofits and charities are both tax exempt in Canada. However, the main difference between a nonprofit and another type of nonprofit, which we call registered charities, is that the registered charities get to issue these official donation receipts. Sometimes we will refer to them as tax receipts or receipts, but their official name is official donation receipts. And these official donation receipts come with significant tax savings to donors, and we'll talk more about that. And the basic point I would make is that there are tremendous benefits of being a registered charity, but there are also tremendous restrictions on being a registered charity. I often run across charities that never should have become charities, that it's not really in their best interest to be a charity. Sometimes it's hard to unwind, sometimes not. In some cases, organizations, they should have a nonprofit in addition to their registered charity if they're looking for maximum flexibility. Now, luckily, out of the 86,000 charities in Canada, the vast, vast majority, they can work within the rules and there is no problem. but for some, in some different areas like political or business or foreign activities or other things in some cases, having a nonprofit which can't issue tax receipts, but it also doesn't have the same limitations, can be important. And I would point out the amount of tax receipts issued by Canadian charities every year is about $15 billion. But the charity sector as a whole has revenue of approximately $250 billion. So the amount of receipting going on in relation to total revenue is actually not that great. So just wanted to point this out sort of by way of background. So why do we receipt? I think you all know the answer, that it can offset federal and provincial income tax. The exact amount is going to depend on what province you're in. It's supposed to be even, and it doesn't matter what you're earning, but in fact, with our complicated tax system, it does matter, and some provinces have surtaxes and other things. So you could, for some people, be getting, say, a 40% tax benefit. Others, it would be 50%. And also, it depends on factors like what type of property are you donating. Is it appreciated marketable securities, for example? And in some cases, with some donors, the tax benefits they could get can be 60 or 70%. And I'll just point out the obvious that Canada has the most generous tax incentive system of any country in the world. And the reason that we have it is there's a number of reasons, but what usually goes along with heavy tax incentives for any particular action is that you will have a very small number of people who will take advantage and use things in an inappropriate way that no normal person would ever consider would be appropriate because of the huge tax incentives going in. So if you put $100 million into a private foundation with marketable securities, it might give you a tax savings of $70 million. And then you have this $100 million that you still control that can only be used for certain things, but you've gotten this tax benefit right up front, even though you might spend very little of that money in the foreseeable future. Okay. Also, in addition, if you gave a lot of money in a particular year and you didn't have a lot of income, you can carry it forward for up to 5 years. And also, you can donate up to 75% of your net income each year. In other words, you can't offset all of your taxes necessarily just with charitable donations, but you can offset up to 75% of the income that you have in that year. So it's a very beneficial system that we have here in Canada, and we need to make sure that we understand the rules, that we comply with the rules, and that we crack down on people who are not complying with the rules, because otherwise you have, and we can see this in the United States right now, where a lot of people are calling for actually much reduced tax incentives for their own political purposes that they have. So now, a few points in terms of, does a charity have to issue receipts? So the simple answer is no. A charity doesn't have to issue receipts. And in fact, a lot of Canadian charities don't issue any receipts. Some of them because they're dormant, they don't issue receipts. Others because they get money from sources like government and they don't need to issue receipts. But a very large number of charities don't issue any receipts. So there's no requirement to issue receipts. The point that CRA makes, and I think it's a good point, is that if you're not going to issue receipts for certain things, you should just let people know so there isn't disappointment later. So what that means is that if, for example, you're not going to issue receipts for donations under $20, then you should let people know that. If you're only going to issue receipts for cash and not gifts in kind, you should let them know that. Or if you're only issuing receipts for cash and appreciated marketable securities, but no other gift in kind, then you should let them know that. And in fact, one of the points that I will make during the presentation is that although the legal rules are going to be similar for different charities on these issues, the policies that charities have will be very different in some cases. You will have charities that just for simplicity, ease, avoidance of risk, etc., will take a more conservative approach in terms of what they can do. Because you're allowed to issue receipts for something doesn't actually mean it's always a good idea for the charity to be able to do it. Because, for example, when we talk about gifts in kind and valuation, and if you don't get it right, that could create problems for your charity. In some cases, you're just better off not doing it. Now, if you're a major hospital and you get $500,000 worth of donations of, used medical equipment every year, and you have people on staff who really understand this stuff, and it's important for your programming that you do it, then that's one thing. But the question for a $5 million charity that might, for a gala dinner, get in $2,000 worth of donated prizes for an auction. The question is, over those $2,000 in donated prizes, if those are the only gifts in kind you get, is it really worth the complexity of it? And maybe you shouldn't be issuing receipts for it. Not to say that you couldn't legally do it, but just that you have to maintain and think carefully about the reputation of your organization. How much risk do you want to have? I would say that a big chunk of the risk that Canadian charities have is their involvement with receipting. And so if you can, for example, with some organizations, it makes almost no difference to only issue it for cash. Cash is much simpler than when you get into gifts in kind. So this is important to realize. Important to realize that that little piece of paper that takes you only a minute or 2 minutes to prepare, if it's for $1 million donation, sometimes that could mean $500,000 or $700,000 in tax benefit. So needless to say, if you've made a mistake, the government will not be particularly happy about that. And what I say to charities is, and this is more on the legal side, if you're in doubt as to the appropriateness, whether it is appropriate to issue the receipt, don't issue the receipt. Unfortunately, I see too many cases of charities who are essentially moving on the sort of more like the idea of, unless we're absolutely sure it's illegal, we'll issue the receipt. And that's the wrong way to think about it, because even a few small receipts can get your organization into quite a bit of trouble. So best off is to, unless you're absolutely sure that it's appropriate, don't issue the receipt. I will mention that CRA, when they've been auditing charities, when they did their small and rural charity report, that's the most recent stats I've seen on it, they worked out that 89% of charities that they audit, and they don't audit, as you know, every charity, but they audit about 800 a year, but 89% of those 800 are not receipting correctly. Now, some of them, it's gross major violations for which there'll be penalties and revocation and other things. Others, it's relatively minor points. But I'm just pointing out, the biggest problem I have is when I talk to some people, they say, oh yeah, we're receipting, we're doing everything right. And it's hard, unfortunately, to talk to someone who is insistent that they're doing everything right when, in fact, they're probably not doing everything right. And it's not necessarily the end of the world. You just need to learn what the rules are, try to make sure that you do a better job, because sometimes it's really hard to fix what was done a year ago, 2 years ago, etc., and come up with systems and policies that work for your organization to make it more likely that you will be getting things as right as possible. And in this area, it isn't always going to be about perfection. So how much is the donation receipt for? So as of about 2002, it's the eligible amount of a gift. So it means that you have to work out what is the advantage, if any, that a donor is receiving when they're giving the gift, and you need to subtract that. So it's the amount of the gift minus the advantage, and that gets you the eligible amount of the gift. Now, what is a gift? So a gift is not the colloquial term gift that we use when we're describing giving something to some person. It isn't about, in like a matrimonial context, where a wife gives to a husband or a husband gives to a wife a gift. It isn't about parents giving to their children. This is, what we're talking about here is a gift under the Income Tax Act of Canada. And essentially there are 4 parts to it. And if you're missing one of these parts, it is not a gift and you cannot receipt. So a gift is a voluntary transfer of property with donative intent. Those are the 4 elements of it. So I'll just quickly go through them. Voluntary means it's given of your own free will. It's not compelled, it's not court ordered, it's not required under some sort of binding agreement, etc., etc. So basically, I'll give an example here of if you are caught speeding and a judge says to you that you can either go to jail for a week or you can give a $1,000 donation to a charity, that would not be considered given of your own free will. You're basically doing it to get out of jail. If you're a union member and there's a clause in your union contract that says for some people who have an objection to paying union dues that you can instead donate the amount to charity, that's fine, but that's not considered a gift because it's not voluntary. If you have people going on a trip and they have to pay for it, to go on this wonderful trip that your charity is organizing, it would also call into question whether it's a voluntary amount as opposed to a forced amount. It has to be a transfer from the charity, from the donor to the charity or qualified donee, and that means a complete transfer. So for example, if one wanted to donate a car to a charity, you can't just drive the car into the parking lot of the charity, go into the charity and give them the keys. You also need to sign over the car so that the charity has the absolute ownership of the car and can really itself deal with it completely, okay? So that's the transfer part. It has to be something called property, which cash obviously is property, gifts in kind would be property, but not services. So services include, so gifts in kind would be something like, let's say you have a flood and a business comes to your charity and says, I have an extra pump, I'll lend it to you for a week, okay? So if they lend you the pump, that's a service. But if they were to say, look, I have this extra pump and I'm going to give it to you, and let's say the pump's value is $200, then they've made a gift to you of $200. But lending it to you for a week is a service, and you generally wouldn't issue a receipt. You can do what's called a check exchange, but that's a much more complicated process that has 4 parts to it. But as a general matter, when someone is lending something to a charity, it isn't going to be a gift, and you would not issue a receipt. So that's the property part that is very important. And then the 4th part is something called donative intent. And that means is that there has to be on the part of the donor a donative intent. And generally, the rule is that if the donor is getting an advantage, which is over 80% of the amount of the gift, then they would not be getting a receipt. So let's say a donor gives a $100 gift to a charity, but they get a book that costs $85. Then you would not issue a receipt for the $15 because it's not really a donation. It's more a purchase of the book. There are exceptions to this, but that's the general rule. So if there's a lot of advantages being provided to the donor, there may not be a gift and they may not get any receipt at all. Okay? So if it's not a gift, there is no receipt that can be issued. Now, the number one mistake that charities make, which also happens to be the easiest thing to fix, is not having all the mandatory elements that are needed on a receipt. And I would say probably half the receipts I have are missing at least one of these elements. And on these 2 slides that you have here, there are the mandatory elements that are needed on the receipts. And then the 3rd slide here is if it's a gift in kind, in some cases there are some other mandatory elements that may be required, and they're on these slides. But just to make it even easier for you, you can go straight to the CRA website, and you can find they have 4 sample types of receipts depending on whether it's a cash or a non-cash gift, and depending on whether there's an advantage or no advantage. And for many organizations, I just recommend cutting and pasting and using the CRA template rather than coming up with something yourself, because this is a pretty black and white thing. The regulations to the Income Tax Act provide for the information that needs to be on the receipt, and technically, if you don't have every single piece of information, then the receipt that you're issuing is invalid. Now, CRA only takes a really harsh position like that, typically when it's situations like fraud. They'll argue that you shouldn't have issued it because it's fraud, but also that what you issued was not appropriate. But I'm just saying technically the receipt is not appropriate. So you could issue $1 million receipt, and if it's just missing like the BN number, or it doesn't have the CRA website on it, technically CRA can challenge that receipt. So very important and very simple thing. Make sure you have every item on that list in your receipts. Now, another thing is that many times people are giving things that are very valuable to charities. In fact, probably the most valuable thing that people give to charity is their time. When we think of volunteers, the average charity in Canada has revenue under $100,000, and the average charity in Canada doesn't even have one single employee, which means that the average charity has a lot of volunteers putting in a lot of time, effort, and energy, and they're not going to get a receipt for that, what they're getting. So it's not just volunteer time. There are a lot of things that are valuable that are given to charities that don't result in a receipt. So it's a mistake to think that if someone gives something valuable to a charity, they deserve a receipt. They only, and no one deserves a receipt at all, but they're only entitled to a receipt if a whole bunch of different things are met, and I discussed, that it has to be meeting the idea of a gift, and the advantage can't be too high, and all this other stuff, but there's other things. So, for example, you don't issue a receipt when you cannot determine either the value of the donation or the benefit or advantage that the person is receiving. So if you can't determine either of those, you don't issue a receipt. Donations of services, we mentioned, so that includes time, labor, or skills to a charity. You don't issue receipts for that. It's very valuable, and usually it's professionals like accountants or lawyers or others who might think, because they're used to charging for their time, that if I give an hour of my time and I'm not going to charge them, but I'm giving them something valuable and I should get the receipt, and the answer is no, they shouldn't. And it's funny because when a person works at a food bank sorting food, they don't seem to have this idea that after they've spent 2 hours sorting food that they should get a receipt for their time. But certain professionals do seem to think it, and one should just make sure that you're not issuing receipts in those cases. As I mentioned, you can do a check exchange, but that means the professional would bill you, you would pay them, the professional would donate the money back to you, and in that case their taxes would go up, the taxes would be offset by the amount of the receipt. There probably is no tax advantage to doing it the proper way with a check exchange. So that's donation of services. It also, by the way, services includes loans of property. So I mentioned the water pump as an example, but it also includes things like timeshares or leases of a premises. So it's a fantastic thing when a major company has extra space in their office and they let you use 10 cubicles. That is very valuable, but it's not receiptable. So just keep that in mind. Receipting isn't a currency that you can just issue whenever you want to thank someone for something. It has to fit within the rules. Another concern is that when the donation is intended for another organization that's not a registered charity or qualified donee. This is what is referred to as lending your registration. So what does it mean? It means that if, for example, a nice nonprofit group that's not a registered charity comes to you and says, we don't issue receipts and we're not a registered charity, but a donor has said they'll give us $50,000, but they want a receipt. Can you just take the money and give it to us? That would be lending your registration, and that would not be appropriate. I'll keep just a separate issue that we won't really discuss on this webinar, but just keep it in mind that people can donate to a registered charity, and a charity can transfer money to a group that's not a charity, which we would call a non-qualified donee. But then there are a whole other set of rules that need to be followed to show that there is the appropriate direction and control over those funds. So just keep that in mind. It isn't to say that a charity can never give money to a non-qualified donee, a group that can't issue receipts, but that instead there are ways of doing it, but it has to be done according to the rules that CRA has and their guidance. Some other things you don't issue receipts for, generally tuition. You wouldn't issue an official donation receipt. The exception is private religious schools, and there's an information circular 7523 from CRA which sets out when you can do that. And that's something that CRA has been really focusing in on because some groups are issuing inflated receipts in that case. Another thing that you aren't issuing receipts for is business advertising expenses, or what's sometimes referred to as essentially a purchase by a business of a certain amount of advertising or sponsorship, and you would not issue a receipt for that. We'll talk a little bit more about the difference between a gift and a sponsorship, but generally the idea would be sponsorship is not receivable. Gifts of promises or pledges, also you would not issue a receipt. So if someone says to you, I promise to give you $1 million next year, you say, that's wonderful, thank you. You might want to get it in writing, you might want to do this and that and the other, but until the actual money comes to you, you don't issue a receipt. Promises also include things like gift certificates, and I have a couple slides on that. Gift certificates, in some cases you can receipt, in other cases you can't, so you need to be aware of the distinction between when you can do it and when you can't do it. Payments of a basic fee for an event or payment for a program like daycare, you would not issue a receipt for that. They're basically buying a service or an event, and you don't issue a receipt for that. Also, membership, and I have a slide later that goes into it in more detail, but generally you can issue a receipt for membership. What you've just got to keep in mind is that if by being a member you get any material value, you have to subtract that amount. And if the material value get as being a member is more than 80%, then you cannot issue a receipt. There are many groups who think, oh, this person pays $500 a year in membership, but they're not allowed to get a receipt, and many groups don't issue receipts, but in fact they are allowed to issue receipts. So it's all just a matter of making sure that you're following the rules. When it comes to lottery tickets, you don't issue receipts. Anything, in fact, involving gambling, you would not be issuing a receipt. So, you know, something like a 50-50 draw, yes, the charity is getting 50%, yes, the winner is getting 50%, but there's no receipt issued for that. Purchases of goods or services from the charity also. If someone buys a rain barrel, I'm sorry that I'm dealing with this theme of rain. There seems to be a lot of rain, but if someone buys a rain barrel from an environmental charity, that's wonderful, but they're basically buying a product and it's not going to be issuing a receipt on that. So donations for which the fair market value, any time of the value that you're getting is greater, the donor is getting, if they're getting a value greater than 80%, you don't issue a receipt. Some other exceptions that are important to keep in mind. If money is coming from a qualified donee is an organization that can issue a receipt. So to give you some examples, in Canada, the federal government is a qualified donee, the provincial government is a qualified donee, municipal governments are qualified donees, other charities are qualified donees, and there's a whole, about 10 groups of these qualified donees. So you need to know who they are, and if money is coming from them, you don't issue them a receipt. And it can be sometimes confusing, because a group could call itself the such and such foundation. It might not actually be a registered charity, in which case you can issue them a receipt. So you really do have to pay close attention. Are they qualified donees or not? If they are qualified donees, you should not issue an official donation receipt. Another thing is, if you cannot determine the name of the donor, you don't issue a receipt, and I think we have some slides on that as well. Also, if it's really you're just giving the money to a charity for them to give it to another specific person, then you generally would not be issuing a receipt as well. So those are some of the things that one has to keep in mind, that not every time something valuable is being given to a charity do you issue a receipt. And as I said, if in doubt, don't proceed. I mentioned check exchanges earlier. This is a little bit of information that's here on check exchanges. Practically, in most cases, there's no advantage to doing it. So once people understand that that is what is being suggested, then they just say, okay, don't worry about the receipt usually. Now, I want to talk about something called split receipting, which has been around since 2002. Most people who are on this webinar are probably quite familiar with it, but they might not know the term split receipting. Essentially, it is the ability to work out if there's an advantage, what that advantage is, and to subtract that advantage. So what that means is that if you have an advantage, you need to subtract it. If you're going to, for example, have a golf tournament and someone pays $250, they don't get a receipt for $250. You have to work out what are all the various benefits that they're getting, the cart, the fees, the food, the prizes, everything, you work it out, and then you subtract that from the amount. And with some types of events, like, for example, golf tournaments, in many cases, the costs are so great that there isn't going to be any receipting issued. And most of the time, people are buying the receipts through companies who are doing it as a business sort of expense, entertainment, that sort of thing. So basically, I would say that in many cases, groups are just not even receipting when it comes to things like golf tournaments. But when you have gala dinners and other things, you need to work these things out. Keep in mind that advantage is a very broad concept, and people are constantly saying, "Oh, but what about this? What about that? Is it necessary to take into account this?" Pretty much anything of value is going to be considered an advantage. So it's not narrow like the definition of property that we talked about, that it has to be property for you to issue a receipt. Yes, it could be that the advantage is property that's being given to someone, like cash or a gift card or a teddy bear or something like that. But it's also the use or enjoyment of property. It's also the provision of services, and it's other benefits like assuming debt or sponsorship benefits and things like that. So there's all sorts of advantages that are out there, and those all need to be subtracted from the amount of any receipt that you are going to be issuing. So another thing is advantage is what the donor may receive in return for his or her donation. For example, food at a gala dinner. If someone comes to a gala dinner and they're not particularly hungry because they ate 2 hours before, so they don't eat much, they don't get a bigger receipt, because it's not about what they ate, it's about what they could have eaten. If you're handing out to everyone a book at the gala dinner, you need to subtract it. Now, if a person is not interested in the book and they don't take it with them, they don't get a higher receipt. They had the opportunity to take it. So what I see some charities are doing is asking people, in fact, when they're giving donations or they're coming to events, asking specifically what people want. So for example, in some cases, maybe they're not going to come to the event and then they would just get a full receipt. Or are they coming to the event and they do want this or they don't want it? Because otherwise you are unfortunately giving them a lower receipt than what the donor would probably want, and it's probably not great in terms of donor relations. So you need to deduct the amount of any amount of advantage when you're going to work out the eligible amount of the gift for receipting purposes. Okay, and so then the next thing I'm going to mention, which we've discussed, is that the 80% rule. So if the advantage is 80% or less, then you can issue a receipt. If the advantage is greater than 80% of the value of the donation, then there is no receipt generally issued. This is something which, in some cases, one can go to CRA and discuss with them. If someone's giving you a $100 million piece of land and they're going to give it to you for $90 million, and there's a $10 million amount difference, in some cases, it would be acceptable to issue a receipt. That is still a substantial amount. So this 80-20 thing is not 100%, but it is the general rule that for 99% of charities is going to be the answer to the question. Also keep in mind that if there is a small, what could be called nominal or de minimis amount of advantage, then in some cases you don't actually have to take into account the advantage. And it's the lesser of $75 and 10% of the value. So, for example, if someone gives you $1 million, I mean, obviously, if you give them a $5 pen, you're not going to reduce the $1 million receipt by $5. But if it was greater than $75, let's say you gave them a $300 pen to thank them for their $1 million donation, yes, you would need to reduce the receipt by $300. So, needless to say, you do need to pay attention to what you're giving and the impact that it could have and that sort of thing. So it's the lesser of $75 and 10%. The other thing to keep in mind is that the fair market value of the advantage cannot be determined, a receipt cannot be issued. So do yourself a favor, don't give things that are indeterminable, that have value, but you can't determine it to a person, otherwise you won't be able to issue them an official donation receipt. One of the most popular questions I get is on meals at events. People think that, well, if we got the meal donated to us, do we still need to take the advantage off? And the answer is absolutely. The person's still getting the same value out of the meal. And basically CRA's position is if it's a meal at a banquet facility, then you use the group or the banquet rate. If it's a meal that is donated to the charity, it's still an advantage. It does not change the amount of the advantage. So it's wonderful, and in many cases charities are paying pretty much full cost for all the stuff relating to these gala dinners. But if you happen to get stuff for free, that's just added benefit for the charity. But the individual coming to the event is getting the same advantage, so they need to have it subtracted. Lottery tickets, I mentioned earlier, you don't do any receipting when it comes to lottery and gaming. And here is just some more detailed slides on receipting of membership fees that I mentioned. So if there's material value, you have to subtract it. But what is material value? And CRA has some examples of what are generally not considered material value advantages. So getting a little recognition as a donor in the charity's newsletter wouldn't be a problem. On the other hand, if it's a business, getting a full-page ad, that would be a different story. The right to attend annual meetings, I always laugh at this one because most organizations have such trouble getting people to come out to the AGMs that they have to provide inducements like, free food and all sorts of other things. But yes, CRA confirms that the right to attend an annual meeting and vote at the AGM is not considered a material value advantage. So an advance invitation to certain performances, for example, where you're saying to members, you can either book early or you can come earlier to the performances. That is not considered a material value advantage. But keep in mind, those people are still paying the exact same price as anyone else. So they're just getting a slight benefit that CRA is prepared to accept is not a material value advantage. On the other hand, there are certain things which are clearly valuable. Complementary items of value provided to a member, a discount on products or services offered by a charity. And in many cases, I tell charities when they're looking at the potential of receipting, don't tie being a member with getting certain discounts and things which make it then very difficult to issue any receipt. Now, certain types of charities, membership is really important as a method of earning money, but for many organizations it really isn't. And in fact, they have relatively small memberships, and keeping it separate is a good idea. But if you gave, for example, parking vouchers to park in downtown Toronto anytime people want, that's valuable. One charity got about a $500,000 penalty leveled against it because they were giving their members burial plot discounts. So if you're not a member, you pay $10,000 for a burial plot. But if you are a member, you get $2,000 off. You only have to pay $2,000. That's a huge material value advantage. And after they were warned by CRA and continued doing it, CRA gave them this $500,000 penalty. So now, fair market value. Fair market value, why is it important? Well, in vast majority of gifts, it's not important because it's cash and there's no advantage going back, so you don't need to worry about fair market value. However, anytime there's a non-cash gift or you're giving some sort of valuable advantage back, so it isn't de minimis or nominal, then you need to be able to work out the fair market value of the gift in kind and of the advantage that's going back. And as I mentioned, if you cannot determine the fair market value of either the gift or the advantage, then you cannot issue a receipt. The onus is on the charity to determine this. And so in some other places, in other countries, the donor has to say to the tax authority, what I gave was worth $100. But here it's the charity. And so I think that unfortunately some donors, their view is, hey, if the charity issues me a receipt that's too much, hey, it's not my problem, it's their problem. In the end, it can be both groups' problems. There's major consequences for mistakes with receipting. We've had in the last 10 years very substantial problems, especially around this issue of determining fair market value, where receipts have been issued in excess of $6.5 billion that were inappropriate, that CRA said less than 1% of that amount went to actual charitable activities. They were part of about 50 abusive charity gifting tax schemes. So what is this fair market value? So here's the definition that the courts accept. The highest price expressed in dollars that property would bring in an open and unrestricted market between a willing buyer and a willing seller who are both knowledgeable, informed, and prudent, and who are acting independently of each other. Okay? Now, many charities think, well, fair market value is the highest price you can get for something. Well, if it was just the highest price, then it would be a much shorter definition. Keep that in mind. It would just be the highest price and not this whole long paragraph. There's a whole bunch of different things here that you have to take into account. And oftentimes, for example, if you're going to buy one of something, it's one thing, but if you're going to buy 1,000 toothbrushes, you would go to a lot greater effort, a normal person, a prudent, informed, knowledgeable person, to make sure that you're getting them for the least amount of money. So it's not the highest price, in fact. You have to take into account all of these factors. And just to make it a little bit more complicated, fair market value applies to many of the donations made to charities. But in some cases, there's something called deemed fair market value, where in fact, CRA says you need to determine both the fair market value of an item, but also what is the cost to the donor of the item before they gave it to the charity. Okay? So then you have to determine two things, not one thing, and you have to pick the lesser of those two things. And so we'll talk a little bit about when does this come in, this deemed fair market value, and it was brought in to deal with some of these simple arts donation flip schemes where someone buys in the morning a print that costs $10, but in the afternoon when they donate it to the charity, ostensibly it's worth $100. So they're trying to capture that. So if the gift is part of a tax shelter arrangement, then the deemed fair market value rules apply. If the gift was acquired, so the item being donated was acquired less than 3 years before for any reason, then it also applies. So in some cases, when people are giving you gifts, you're going to have to determine when did they actually get that gift. Because if they got it just 6 months before, the question of the cost of acquisition may be appropriate. And we'll talk about some exemptions as well to these rules. Another one is if the gift was acquired less than 10 years before the time of donation, and one of the main purposes was to make a gift to a qualified donee. So in this world of Twitter and Instagram and LinkedIn, it's actually a lot easier. So if someone buys a painting and tweets, "This is a great painting, I'm looking forward to holding it in my office, but I will definitely give this at some point to the YMCA because this would be just perfect for their auditorium or something like that." Well, there's an intention to make a gift to a charity, and if it's within 10 years, then that would apply as well. So there are some exceptions to the deemed fair market value rules, which can be quite harsh in certain circumstances, but they're needed in order to deal with the complexity of some of the abuse that's going on in Canada. So some of the exceptions are relating to if a gift is made as a result of a person dying, then whether they got it 3 years ahead of time or 2 years ahead of time is not that relevant. Okay? Gifts of inventory, that's when a company is giving something that is part of its inventory, as well as gifts of real property situated in Canada. So what the value of the real property in Canada is will be determined on the date that it's given to the charity, fully transferred to the charity, and not these deemed fair market value rules. However, I will point out that this does not apply to property situated outside of Canada. So if you were given, let's say your parents sold you a piece of land in Montana for $1 million, it's actually worth $10 million, and you were to donate that land to a Canadian charity, you had received it within the last, say, 3 years, you could get a $1 million receipt, not a $10 million receipt. So you've got to be watching these rules because what they do include and don't include can be quite important. Certified cultural property, generally speaking, it doesn't apply, except they recently changed the Income Tax Act to say that it does apply when it relates to tax shelter transactions, which was something that, unfortunately, there have been a number of these certified cultural property tax shelter type schemes, and now they are covered by this type of rule. And then the most important one, probably for your average charity, is gifts of certain publicly traded securities. So whether someone bought shares in Bell a year ago or 3 years ago or 6 weeks before they donated to the charity, if it's publicly traded securities, it doesn't matter. So those are just some points and exceptions that you've got to keep in mind when it comes to deemed fair market value. And the main thing to keep in mind also is that everyone can just ignore this issue if they want. But if the donor, say, bought a painting for $20 million a year ago, and now it is really worth $25 million, and they don't tell the charity that they pay $20 million, and they just think, oh, let's get a fair market valuation, it's $25 million. They donate the item to the charity. The charity gets a $25 million Van Gogh. That's great. But CRA can deem the amount to be nil, and the receipt will be valueless, because unfortunately in that case the charity should have made sure that they found out, and the donor should have told the charity that the maximum amount that they could have gotten was the 20 million, not the 25 million. Okay? So definitely pay attention to these rules. An example, a more realistic example for a charity, a person buys a piece of art for $500. 6 months later, the piece of art is valued at $1,000. As it's a gift within 3 years, you can only issue a tax receipt for $500. And if the donor doesn't advise you, you don't know it, the CRA could deem it to be zero, which can result in you having an unhappy person. So just keep that in mind. Now, in terms of gifts in kind, also, I think charities need to be a little bit more careful. Do they even accept the gift in kind? There's really two issues. One is, do you accept it? And the other one is, do you receipt it? Right? And I would argue that the vast majority of gifts in kind given to charity are not receipted at all. And the bigger issue is actually one around, should you even be taking it in? Is it just they're dumping junk on you, or is it something that's actually useful? Either the charity can use it in its normal operations, or it can easily sell it at a significant markup. If it isn't either of those two things, you shouldn't be accepting the item. Gifts in kind can create significant legal and ethical issues. and one can get into this in a big way. The basic point I would just make is that in many cases it's best to decline offers of gifts in kind, and for many charities that are looking at making their lives easier, unless you're getting in significant value from gifts in kind, you want to probably look at perhaps accepting them, but perhaps not issuing donation receipts, and just let people know ahead of time. And if someone really wants to support the charity, they'll give you the item. And if they don't, all they're looking for really is a tax receipt, they'll find another charity, and that charity can do all the work and investigation and working out the fair market value and all that other stuff. Okay? So some questions to ask: is the gift in kind donation for your mission? Is the product appropriate? Do you have policies on gift in kind donations? What fees are being charged for gifts in kind? Because sometimes they're giving you the thing for free, but there's a fee attached to it that is more than the value of the item. Like an old boat that's been tied up for 5 years at a dock that is worth about $5 grand, but the fees to get it out are 20 grand, and so really should you be involved with it. Also a non-receipting issue, but what disclosure of valuation, source, and use is made in your financial statement. It's sometimes not an issue of should a receipt be issued, but are you being accurate when it comes to fair market value of items? Because some people have used them to inflate their revenue figures for the charity, and that's another problem that one should try to avoid. Keep in mind also that when it comes to gifts in kind, CRA generally says that if it is a gift in kind that's under $1,000, then someone affiliated from the charity with sufficient knowledge may determine the value. So they have to have sufficient knowledge, and it has to be under 1,000. If it's over 1,000, then CRA recommends your professional appraisal by a third party who's knowledgeable about the specific marketplace and not associated with either the charity or the donor. So you really want to get someone who's independent. So clearly it cannot be the donor who suggests who you go to, or the donor provides you with the appraisal. The appraisal would include the name and address. So when you do get an appraisal, you include the name and address of the appraiser on the official donation receipt. In some cases where it's a complicated thing or a large amount, it might be worthwhile to get more than one appraisal. CRA has a lot of people who are appraisers working on their staff who have a lot of experience dealing with appraisal issues, and if CRA has a problem with an appraisal, they will challenge it. And it's the responsibility of the charity to determine the fair market value. You can read, there's lots and lots of cases where the courts are not accepting exaggerated sort of appraisals, even though the appraisers have long curriculum vitae, resumes that are like 10 pages long, and they're part of a whole bunch of institutes and this and that. They look very impressive. The courts are just throwing out these appraisals, and even some major accounting firms and others have been hit with this problem of issuing appraisals that the courts are not prepared to accept. So keep in mind also with gifts under 1,000 that even if you don't have a valuation, you still need to keep the supporting documents that show why it's appropriate that you issued that receipt. And also the staff person may not be available in a year or 5 years from now when it comes up as an issue. Now, when should a receipt be issued? We've said that charities don't have to issue receipts ever. So the answer is there is no particular timeline that you have to issue a receipt by. But what CRA recommends is that generally by the end of February, you should issue receipts for the previous year so that the donor has it in time for when they're preparing their tax returns in March or April. Okay, so that's sort of the general advice. Keep in mind also that with a gift in kind given on different days, you need to have separate receipts. So if someone gives you 4 chairs on 3 different days or 4 different days over 4 months, you need to have 4 different receipts. Whereas with cash, you can combine it for the whole year in one receipt. If it's monthly donors or someone who gives 2 or 3 donations during the year, it's sometimes better to actually just wait till the end of the year, issue one receipt. There's a number of advantages to not issuing receipts just sort of every day or every week or whatever, and rather thinking, should you maybe issue receipts once a year or twice a year? You can issue a lot less receipts if you have, for example, all cash receipts being dealt with at the end of the year. So just another thing to keep in mind. Also, some charities get in a lot of trouble because they say, oh, we will issue a receipt within 48 hours of your donation. You shouldn't make commitments like that. I think you should acknowledge receipts, but an acknowledgement is a different thing. You should thank the donor quickly for their donation, but the receipts should be, for most smaller charities, certainly probably issued once a year. The worst is when a CFO, the person who handles receipting, goes away for a 2-week vacation. And yes, they're entitled to have a vacation. Because you work for a charity doesn't mean you have to be there 24/7. So yes, they're entitled to the vacation. While they're away on vacation, the policy is receipts are issued in 48 hours, and some volunteer or other staff person who doesn't know what they're doing issues a whole bunch of receipts, and you end up, when you come back from vacation, you have to spend the next 6 months picking up the pieces. So that's why be careful about issuing receipts and who can issue those receipts. If you have lost or spoiled receipts, there are particular requirements from the CRA in terms of what you're supposed to do with that. And if you're going to issue another receipt, you need to put on that it cancels and replaces the lost receipt, and then mark your copy with the word canceled on it. If it's a spoiled or incorrect receipt, then you can issue a new receipt, but you need to say on it that it's replacing another receipt and that sort of thing. Okay. Also, many charities increasingly are doing computer-generated receipts, which can be fine. Make sure it's legible and protected from tampering. You don't want to have people, for example, you don't want to send out a receipt in an unlocked Word document or Excel spreadsheet where people could change the date, the name, or the amount. Okay. You also want to make sure that in addition to, so for example, PDFs would that are locked would basically not allow a person to change them, and that would probably meet that criteria. Also, the password that is on the computer that is being used to issue the receipts, there should be a password on that computer. Also, keep what CRA calls non-erasable media, so something like CD-ROM. If you are using something like a spreadsheet to do your receipts, make sure you burn a copy of the spreadsheet every, say, 3 months or 6 months, so you have a non-erasable media thing, because you don't want someone, if they come and later make changes to it, that it's not possible for CRA to have sort of an audit trail. The hard copy of the receipt must be printable upon request. So you need to keep a copy. It could be an electronic format, but just make sure it's in a format that is going to be accessible later. Sometimes these things are in formats that are proprietary to a particular program that you're using, that you may no longer be using, you may no longer have a license for, and that could create some big problems for your organization. Okay, so make sure it's printable upon request. Again, PDF is one that's pretty simple to then print later. You can send it by email, but it must be, as I would say, read print only and non-editable. Okay. Gift certificates, we discussed it briefly before. In some cases, you can issue a receipt for gift certificates, sometimes not. And here's just some more details on it. Essentially, if you have an individual who has paid valuable consideration for it and they are not the issuer, so let's say a bookstore, a person goes in and buys a $100 gift certificate from the bookstore, then they donate that to the charity, then that would be receivable. On the other hand, if the bookstore gives a $100 $100 gift certificate or a gift card, you could not issue such a receipt to the bookstore. So just keep in mind that distinction there. The name of the donor comes up occasionally, and it's a question of fact. Who actually is the donor? Who actually gave the money? Is the person doing it just a third party organizing an event and taking in other people's money? So if you think of like a wedding where people say, give us, the money and we're going to donate it to one of the major charities in Canada, in that case, people might even give more money because they know that it's really just being taken by them, and they're accumulating it and giving it to the charity. But the donor then is the individual, not the married couple. On the other hand, if a married couple just was given a whole bunch of money and they decide, you know what, we want to give a whole bunch of this away to charity, in that case, it may be appropriate that the married couple would be the donor. So very important to work out who is the donor, because it affects who can get the receipt. And sometimes the donor doesn't have the tax need for the receipt, and that's where people try to play funny games afterwards. When it comes to spouses, it's pretty simple. It can be in either name. It's not a problem. But for example, when the check comes from a corporation and subsequently you get a call from a person who's the president who says, oh, by the way, could you make that receipt out to me and not the corporation? So there's a real question here. Is it the individual's money or is it the corporation's money? And you would need to get some real solid evidence to make sure that it is in fact the corporation's money. So for example, a letter on the letterhead of the corporation where it says that the true donor is the individual, that it's their money, it's not the corporation's money, and that the receipt should be made out to the individual. Keep in mind that if this is not accurate, then the corporation that sent that letter is basically committing fraud. It's a big problem, and but then it's not the charity's problem in that case. Okay, so it's just very important the charity have the documentation on hand to show why that is the correct donor. I'm not going to talk too much about the problem of inappropriate receipting. I already hinted that it's very large in Canada, which is to be expected because of the very significant tax incentives we give. If you want to read the Organization for Economic Development, Organization for Economic Cooperation and Development, the OECD, did a report a few years back that basically compares 19 different countries, and Canada is by far the worst of those countries in terms of abuse. Keep in mind that there can be very significant penalties. So if your charity issues, say, $10 million worth of receipts, and let's say $1 million of them were not appropriate, or were there wasn't a gift or false information, you could have on that $1 million amount very significant penalties, so up to 125%. So you could have $1.25 million penalty, and these can be assessed against the charity, but also there can be penalties assessed against individual directors, etc. In addition to the normal things about suspension and revocation and all that other stuff. The biggest penalty I've seen against an individual was for $24 million. So you really do want to make sure that when you're dealing with receipts that you're doing it right, and if in doubt, don't receipt. Another thing that comes up occasionally is about returning gifts. Generally, you cannot return a gift under common law, but more importantly, that the idea is if a gift has been made, if it really is a gift that you could receipt, it's a voluntary transfer of property with donative intent, well, then they've given it. It isn't anymore the individual's item, so you can't return it to them. But if, for example, something's been given as a conditional gift in some way, in many cases, you're better off not issuing a receipt until the condition has been satisfied and there is no longer a condition that is there. Another thing that CRA recommends is if a donor is very upset with the charity and wants their gift returned, another way of dealing with it is in some cases to just donate it to another charity, so it isn't returned, but it's given to another charity. You should look to CRA guidance, as well as if you're in provinces that, like Ontario, that have a public guardian, they may object to you returning a gift. Essentially, new rules that came in a few years ago, if a gift is returned where there was a receipt issued and the amount that is returned is over $50, you need to report it to CRA compliance. So someone technically may be entitled to a gift to be returned. You could get in a little bit of trouble as a charity if you were to report it to CRA compliance. So you may want to discuss with the donor whether they really want the gift back if a receipt's been issued. And another few things to keep in mind is, in terms of avoiding problems with receipting, is make sure you have a gift acceptance policy, which talks to issues like what types of gifts you will accept, what are some of the conditions and things you will or won't accept, whether you will accept, for example, endowment funds and things like that. Because it's easy to accept an endowment fund, but you're committing your charity for hundreds or thousands of years to maintain the money, to do all sorts of things, and quite frankly, for many charities, this is not actually going to help them with their mission. It's going to create problems. So be very careful before accepting restricted gifts and things, and that's why you have a gift acceptance policy. Generally, don't issue receipts until you know that all the conditions are fulfilled. Obtain legal advice about complicated donor arrangements. I can tell you the donors will often have one or two lawyers helping them understand what they can do and pushing what sort of envelopes can be pushed. And you have to think not only legally, but ethically and standards-wise, and in terms of the reputation of your charity, around how to protect that reputation. If there's special projects that are being requested the money for, so you're raising money for, say, flooding in Calgary or something like that, then remember that the money has to be spent on what you've said it's going to be spent on. And if you had too much money, in fact, you may have a big problem. So then you must have try to think about, should you have language that will allow you to repurpose the funds for something different if there is something different that happens. But sometimes money is asked for narrow issues, and it creates a big problem later for the charity. Auctions, I won't go into it, just to say that there's two separate parts to the auction. When someone donates items to the charity, in some cases you could issue receipts. Whether you want to is a different story. Also, the person who's the bidder, generally speaking, the person who's the bidder who's paying less than the fair market value of an item is not going to be getting any receipts. For them to get receipts, once the bidder has sort of been successful, you'd need to meet these 4 criteria here. And so in a very small number of cases, a receipt will be issued when there's auctions. I'm not going to go through it, but the difference between donation or sponsorship, very important to keep this in mind. In many cases where you, for example, have a business giving money to a charity and they're getting a huge amount of publicity out of it, it's sponsorship, it's not a donation, and a receipt would not be issued for that. Another issue that I'll just raise, because it's become a high-profile issue for the CRA, has been certain travel expenses. Individuals, say, going to Rome for a week. It's a very expensive trip. And yes, there is some business being done that relates in some way, shape, or form to the charity, but the individual basically is essentially getting a receipt for what is really a private trip, and CRA has been very concerned about it. So there's a few issues. One is the issue of voluntariness. Another one is this really something which is really necessary for the charity, and this is the reason for the trip, or are they using it as an excuse, essentially, to be able to get certain private benefits, and they really shouldn't be getting a receipt. They also look closely at things like amenities. So if you're going to send someone to Costa Rica who's going to be digging toilets for a month and they're living in tents, you're probably not going to be getting any arguments from CRA. But when you're staying at the Hyatt or some fancy hotel in a foreign country, and you're flying, business class or first class to get there, and all this other stuff, expect that there will be a lot of questions from CRA. Keep in mind that if it's important for the charity that an individual go on a particular trip to a particular country, another way of dealing with it is the charity just pays for it. I mean, the charity doesn't ask its executive director to give money when they go on a trip. They just pay for it. So if it's really important, pay for it. And if it's not really important, don't send the people out, is another solution to the problem. Okay? So you can read, CRA has some things on mission trips and other things, and you want to make sure that whatever you're doing is within the rules. Another sort of final point I'll mention is on third-party fundraisers. You have a lot of people. It's a great thing when others are doing fundraising for charities. There's a big difference between third-party fundraisers that are paid fundraisers, like the people sometimes who are accosting you on the streets, those type of fundraisers. So that's one type of third-party fundraiser, which there's all sorts of rules around making sure that you have proper agreements with them and that it's not excessive compensation and all that. But a very common type of third-party fundraiser is just when a individual decides they want to do, as a volunteer, a fundraising event for charities. And you really do need to pay attention to these things, because when you're aware that they're doing it, it suddenly becomes, to some extent, according to CRA's guidance on fundraising, that you're on the hook. If they do things that are inappropriate at that event, you can be on the hook. So make sure that you have proper application processes and rules around what can be done with third-party fundraising, and don't just allow the person to say to people, oh, I'll give you receipts for this, this, and this. You need to ultimately be in control of receipting and make sure that it's done only appropriately. Okay. Then who handles receipting in your charity? Make sure you know who collects the information, who prepares the receipts, who signs the receipts, who makes sure they're stored appropriately, and very important that that you're aware of these things. Also, if it's one person who's doing everything, you have a bit of a problem. What happens if that person isn't available? But also you have a problem of, it's more likely that you're going to have inappropriate receipting. It's the same as dealing with cash and checks. You don't just have one person who can just issue checks. They can issue checks on whatever they want. And I would argue that with receipting, it should be treated the same way, because from a CRA perspective, your ability to issue receipts might be more valuable than the money you have in your bank account. And in terms of avoiding improper receipting, just some quick guidelines. Know the rules for proper receipting. This presentation is some of the information, We've also done a receipting kit. If you type in receipting kit, you can find on Google our receipting kit, which has, for example, CRA, the checklist they use just for receipting, which has pages and pages of questions, and you can look at it, as well as a lot of CRA policies. It's about 150 pages long, just to give you an idea. So when people tell me, oh yeah, we're doing our receipting and it's all done perfectly, I sort of just wonder, you know, because I haven't met many charities that do it perfectly. Make sure that other volunteers, board, etc., are involved with receipting. They also know the rules. Otherwise, no one should be touching receipts unless they really know what they're doing. Ensure the receipts have all the mandatory fields. That's one of the easiest things you can do. Have good governance and bring the board into the receipting discussions. The issues are raised in terms of whether you should be issuing receipts for gifts in kind and other things. This is not an issue that should be decided by one staff person, you know, or someone like that. It really is a board level decision, because it could get your charity in a lot of trouble. A lot of resources have to go into this sort of stuff. Have a gift acceptance policy. Make sure it's up to date. Follow through with it. It can avoid a lot of problems if you have a proper gift acceptance policy. Also, it protects the fundraisers so that they can say, look, we can't do X, but we can do Y because our gift acceptance policy says it, as opposed to the donor just thinking the fundraiser is being difficult. Be careful with gifts in kind, and especially inflated valuations. Stay alert and avoid abusive gifting, tax shelter schemes, and what CRA refers to as fraudulent receipting. Have good controls over who prepares and signs receipts. Make sure you have, and this is all part of being adequate books and records that CRA requires of every charity. And when necessary, obtain legal advice or call the CRA. Okay, a couple resources that you might find helpful. One is this receipting kit that I mentioned. The other is that our law firm has done, has a directory where we put all the information that comes up over the last number of years relating to receipting in one directory, and you might want to check out that directory. Anyway, Marina, thank you very much in terms of the presentation, and if there are any questions, I'm happy to answer them. Okay?
Wonderful. Thank you so much, Mark. That's been an absolutely jam-packed presentation, and I know there's a lot of info and a lot of questions coming in. We're not going to have time to go through too many of them today because we are over time. Before we dive into that, I do just want to remind everyone that you will get the full recording tomorrow, including the Q&A. So if you need to jump off the call now, you know, you will get that tomorrow by email. Okay, so let's dive in. Mark, now, you've made it clear that charities don't have to give receipts. If they have kind of a general rule that says they don't issue receipts for, say, under $20 or $25, is it generally good practice that if the donor asks for one, that they provide it?
Well, I mean, for example, that's a good question. I think there would be no right answer there. I would say that another way of formulating it could say, we don't issue receipts to donors for under $20 unless they specifically ask for it, and then that would solve the problem. And you could issue them the receipt for under $20, but keep in mind that there's a certain amount of bureaucratic work that goes into putting receipts together and things like that. Some charities have it down to a science, and in fact, a lot of groups, they offload their receipting on groups like Canada Helps, because you know, they could have 1,000 people give amounts like $5 or $2 or whatever, and Canada Helps would take care of the receipting, and then they don't even have to worry about it, and they get one check sort of deposited into their bank account, and for them that is actually a really great solution to the issue. But you are free as a charity to come up with your own policies that work for you. I see some charities doing a lot of work to issue these receipts for $5 or $10, and especially if it's been done the old way with mail, and you have to mail it to people. I mean, in the end, it's costing you more money than the value of the thing, and that's not the purpose here of having a tax incentive. And I'll just point out a little ironic thing, that about $15 or $16 billion in receipts every year are issued by charities, but the amount claimed on tax forms by Canadians is only about $9 billion a year. So there's a $5 or $6 billion gap where receipts are being issued by charities, and for various reasons, people are not even claiming them. Some of them, it's because they're giving less than $200 a year, and it's not really worthwhile to claim. Some of them, it's just that even if they're giving $400, which is sort of an average amount, or $500, they're thinking, the amount of the difference, it's not that much. I don't really care. I don't want to keep the records. I don't want to keep track of it. I don't want to calculate it. I just want to get my form in. So they're giving up on the tax incentives. Now, for someone who is sort of an investment advisor or a lawyer or a estate planning person or whatever, the notion of not using a tax receipt is like heresy, okay? But I'm just saying many people don't do it. But, you know, you don't want to get into a fight with a donor. So you might want to make your policy that you will issue it as long as the person is specifically requesting it. But under $20 or $10 or whatever threshold, you don't issue the receipt. Okay?
Excellent. Now moving on to the third-party fundraising. So if you have someone who's organizing a third-party fundraiser and they have paid out of pocket for expenses such as maybe catering or paying for the event venue, can donation receipts be issued for the amount of those expenses, or is that considered more like a gift in kind?
So one would have to work out the exact story with the particular thing. What I tell people is, before you have a deal with a person who's doing a third-party event for you, and we're talking volunteer event here, that the best thing is to have a certain number of terms. We have, for example, about 5 pages of terms that just say things that are pretty obvious to people that are in the charity world, but not so obvious to people who aren't in the charity world. So basically, one works out ahead of time, and on the issue of, how does it work? Well, for example, some of these events actually don't raise money. They actually lose money. Who's going to be responsible for that? And by the way, it's not a disaster if there's a third-party fundraising event and it doesn't raise money. Because if you had 100 people at an event and they become aware of the work of the charity, and the charity gets the names of 100 people and their email addresses, and all these people have consented to be contacted, that event could actually be a very successful event, even if it's made no money. So you can't rate these events purely on the money thing, but you do need to come up with, in the same way that if a charity did an event, you need to work out what is the advantage that each individual person is getting. So let's say there's an event and all you get is a hot dog and a drink. And let's say the cost of that is $7. And let's say everyone has to pay $100 to come. Okay, so the question is, in that case, it might even be considered de minimis. And you might not have to deduct the value because it might be lesser of the 10% or $75, right? So I'm just mentioning that you'd have to go through that thing, and we tell our clients, send a little Excel spreadsheet to a person who's organizing an event so they can track all the information that's needed, the name of the person, their address, the amount they gave, the advantages they got, everything, so that then in the end you are able to issue receipts if there's a need for receipts to be issued. Also, you can collect a lot of additional information from these people that will be helpful. All sorts of little things like getting pictures from the event. If you don't have consents from the people to be in the pictures, it's questionable whether you can use the things. So like I said, there's a whole bunch of little issues that you should take care of. And if you do it well, third-party events can be a wonderful way to spread the reach of your charity that doesn't involve a lot of effort compared to you organizing the events yourself. Okay?
Great. Now, maybe you can just run through quickly again, because we have had a lot of questions about this, in whose name the receipt is addressed to. So we've had a lot of questions about things like cash donations that have been made as a gift or in memoriam, and can the receipts be issued to someone other than the person who gave the donation?
Right. So the answer generally is that it's the donor. This is the question. So I'll give you an example. Around Christmas time, you will have a grandmother who will send a donation for $100. And she will say, I'm giving you this donation. I'm giving it on behalf of my 4 grandkids. Okay? Can you please issue them each a receipt for, $25 or something like that? And the answer is no, you can't. It's not the grandkids' money. It's her money, and basically you need to issue the receipt to her. So if you think about it this way, another situation is a person organizes that barbecue, and 100 people each pay $100, and that person comes in with all this money. That is an event that was being used to raise money for the charity. It's not the organizer who gets to take the money and issue the receipt. Okay, and then the receipt doesn't go to the organizer, it goes to the individuals who are the donors. So very important. Now, you can organize something in a different way. So, for example, you could organize it when you go to Loblaws, for example, and you make a $2 donation at the till. In that case, Loblaws is taking in the money, and they either are taking it in sort of and holding it on the side, and it's not income, and then they're handing it off, but in that case they wouldn't get a receipt, or they're taking it in as income and they're giving it to the charity, but then they have to pay more taxes, and all that the donation receipt from the charity does is offset it. But you can't sort of mix and match here. You got to work out, and you got to work out who is the donor. And the only time it isn't really that relevant is when it's a husband and wife. It could be either of them. It doesn't really matter. CRA will accept either. But that doesn't apply, for example, to child or grandchild. So one just has to work it out. And if in doubt, don't receipt. And also, if in doubt, you can ask for a declaration from the person who's the donor as to why they're the donor. And this doesn't come up that often, but it does occasionally come up. And you know, in the case of the president and the company, sending the letter or doing the declaration. Hopefully that answers part of the question.
Yeah, that's great. Now, if you do identify that you've had some errors in your receipting in the past, maybe there's a small piece that you've been doing wrong, or one situation that has, you know, been in error. What steps should a charity take if they've discovered that? Is there a grace period with CRA before they, you know, instigate an audit? Should they be reporting that? What should they do?
I would say in 9 times out of 10 that it's a small thing that's been found. There are actually many bigger things that they just haven't found, and they don't you know, so that's one thing just always to be careful with, okay? So as a general rule, what I say to people is, with many compliance issues, it's very hard to fix the past. You know, 3 years ago you issued a receipt that's inappropriate, the person's already claimed the amount, etc., etc. On a go-forward basis, fixing things is 1% of the work than fixing the past. And so people will work hard to fix the past, but then they won't actually get their systems really working well. Now, there isn't an official voluntary disclosure program like it applies to individuals and corporations when it comes to charities, but CRA does have some guidance on it, and one could potentially go to CRA, but I'll just point out a few factors. One is that you need to make full disclosure of all issues. Needless to say, probably whatever the person's discovered as a problem from the past is one of the least of the issues, but I'll just mention that as an aside. So you need to make full disclosure to CRA. And you know, basically, then you've got a possibility CRA will audit you, etc., etc. In most cases, I would say that when you're talking about relatively minor types of mistakes, for example, maybe you didn't have the CRA's you know, email or web address on your receipts, I would just say immediately put it on, fix it, and on a go-forward basis, move forward doing things the right way. There's little to be gained by going to CRA on it. On the other hand, if there was a problem like a fraudulent receipt issued or something like that, I would immediately go to CRA or the police or whatever, depending on the circumstances. So it really, you have to look at what it is, and I am very much a fan of doing things better, and instead of just looking back and saying, oh, we did something wrong and we feel so bad about it, rather look at what you're actually doing, and in many cases one will find that there are a number of issues out there with receipting, and just try to make them better and fix them. And it's a constant challenge with changes in volunteers and staff and other things. You might be doing a great job and the person is expert in receipting, and then you have a new CFO who comes from the business world who doesn't know much about it, and you know, all of a sudden things are not, let's just say, done in the way that they were done in the past. So it's a constant thing. It's education, it's understanding, it's being sensitive to these issues, and that sort of thing. But I would say there's very limited circumstances where running to CRA is the best approach.
Okay, great. And final question, I know you've given a lot of resources in the slide deck and further places where participants can go for more information, and that's fantastic. If somebody has a very specific scenario that they're trying to work out, do you have some recommendations? Where should they go for help? Should they? Well, I mean, yeah,
from a selfish point of view, it's easy. They can, you know, they can come to us. We're lawyers. We charge by the hour. We look at things and we work through with clients. The problem is that when you go to CRA, there's a few problems, and I'm a big fan of actually putting out, you know, CRA's number, call them, it's an 800 number, all that sort of stuff. It sounds great, but and when it comes to receipting, actually, they are quite knowledgeable about it. So if it's a regular sort of question, in some cases it could be a good place to get the answer. And like I said, in many cases, the answer is in the receiving kit or the answer is on the CRA website. So I would start there, probably look in those things even before calling CRA. But, the problem is if you actually wrote a proper letter to CRA asking a question, first of all, there's the possibility that they could potentially audit you is an issue. Secondly, a proper letter, which is something that you could rely on, you would be looking at a response time of approximately a year, okay, which is hardly very helpful. Unfortunately, CRA does need to put more resources into responding to letters, they've spent a lot of time on other areas, unfortunately. So I think that in some cases also keep in mind that it's all factual, so that if you only give CRA half the information, they won't be able to tell you the answer. So you need to sometimes work with someone who does know about these issues. A lot of the time people think something is a very big problem or an issue, and it's really actually not such a big issue. And with receipting, in some cases, these can be very short conversations, in 10 or 15 minutes. Once one's gone through the basic issues with an organization, then many of these issues, they can be 5 or 10-minute discussions. So those are things where I would say there's a lot of value in working with a lawyer who's very knowledgeable about it. But in terms of resources, I would say be careful, even if you're just going to a professional advisor, unless they're really knowledgeable about this very narrow area. You will maybe get the feeling that you're getting good advice, but it might not be so wonderful. So either go to a lawyer that is knowledgeable in this area. Also, there are some accountants that are very knowledgeable in this area, or go to CRA. Those are sort of the options that are available. As well, also sometimes, but sometimes it doesn't work out so well, talking to someone who's in another organization who's very knowledgeable about this. The problem is most of the people who are dealing with receipting, they're not always in the best position to know whether someone else in an area that they don't know themselves, whether someone else is very knowledgeable about it. So it's a bit of a challenge, but this is such an important issue. And I would just say, in the end, it's you get back to, if in doubt, don't receipt. Don't issue the receipt. And then also what I tell people is, and oftentimes I'm used, it's not about even not knowing the answer. The individual knows the answer to the question. It's about the person asking for the receipt is the chairperson of your board, okay? And in many cases, the person, the CFO is, oh, I don't know if we can issue a receipt. I just don't know. But in fact, they actually know that they're not allowed to issue a receipt. And so we are sort of like a little bit of a buffer in that people will come to us and say, here is the situation. Can you tell me, is this appropriate? Are we allowed to do it? And then I'll write back 2 lines. No, that does not appear to be appropriate. You cannot do that. And so I hate to say it, probably about 1/3 of the questions on receipting are things like that, where it's not that the charity doesn't really know the answer. It's more about that the people in charities, a lot of pressure is put on them, and trying to help them navigate, without having a mental breakdown, their difficulties that they have to deal with. And some of the most difficult situations are from board members of their own charity, who are sometimes also the most generous supporters, but also expect sometimes to be getting receipts for things that they're not entitled to. Okay? It's a long way to answer the question, but thanks for the question.
Oh, that's great. Thank you, Mark. Well, we're going to close things there. I want to thank you again. Every time Mark presents for us, he brings a ton of information. So thank you so much for being with us today. We really appreciate it.
And thank you very much to Charity Village for allowing me to do the presentation. I really appreciate the opportunity.
Awesome. Well, we'd love to have you. So just before we sign off, we do want to remind everyone that we're following up by email tomorrow with the recording. We're also going to include a short survey there, so please take a moment to fill that out. It's really helpful to us. You'll have an opportunity there also to let us know if there's future topics you'd like to see covered. So again, just takes a few minutes. So thank you, everyone, for joining us, and I hope you all have a wonderful rest of your day. Thanks so much.